Welcome, everyone, to a conversation today with Meryl Breidbart from At One Ventures. This is a part of a climate investor series that Work on Climate is hosting along with Innovate Climate Careers as well. My name is Utkarsh Vaidya. I am the events lead for Work on Climate. Today hosting with me are Pranav, Khanna, and Daniel, who are representing Innovate Climate. And for those of you who encountered this event outside of the Work on Climate community, we are a Slack community that's focused on helping people transition their careers into climate. So you can find us at workonclimate.org. Without further ado, Pranav, would you like to introduce Meryl?
Hi, thanks, Utkarsh. I'm just going to change the order slightly. I'm just going to bring in Daniel for a quick 30-second on Innovate Climate Careers, and then we'll hand it over to Meryl with an introduction. Daniel, you want to come in?
Yeah, thanks, Pranav. For those who don't know me, volunteering in the climate sector, building resources to help folks like you get connected in general. That's been the motivation behind Innovate Climate Careers, to really bring a human component back into hiring. My original newsletter that I started first is Innovate Climate, to help startups connect with people, anyone who's interested, really. Both the links are in the chat, but as I'm one person doing all the stuff outside the day job, Pranav helps me out behind the scenes. So appreciate your help, Pranav, and back to you.
Thanks, Daniel. So before I introduce Meryl, guys, I just want to put this on the record. We've, at the back end, we've been seeing this huge surge in the number of call outs in terms of openings for candidates. So I think this is a great time. And if you guys are still sitting on the fence and thinking of, is this the time to switch? I would absolutely urge you to go out there and take up a position in the climate space. It's super hot, no question about that. But very quickly, let me come to the topic of the day. Allow me to introduce Meryl. Meryl is an associate investor at One Ventures, and that's at One Ventures. That's like 3 words, guys. Prior to joining at One, Meryl was co-founder of Chirps, and Meryl, I love that. It's a cricket snack company, right? That's not something you come across every day. And she was also an early stage employee at 2 NYC-based tech startups. After earning her MBA, Meryl pivoted to venture capital, first at LDB Capital and now at One Ventures. At One, Meryl helps oversee platform efforts, including organizing and maintaining the job portfolio board and talent network. At One Ventures is a climate tech venture capital firm on a mission to help humanity be a net positive to nature. With that, guys, please, here is Meryl with what she has in her portfolio. Meryl, all yours.
Thank you so much. I don't usually prepare slides for things like this because I feel like I'm sometimes good off the cuff, but maybe I will skip some of my slides to start and I will share some halfway through because it's nicer for me to be able to see everybody's faces. So I was told to start with a little bit of a background about my career and how I got to be where I am, and then I'll talk a lot more about what we do at One and the over 200 jobs or something like that last time I checked that we have at our portfolio companies at the moment, and then can field any questions that you might have. But I actually first got started in college. I studied design. Didn't necessarily think I would have a career in the climate space. I was really passionate about and interested in the way in which information is presented in the world. I graduated from college in 2013 and was itching to do a little bit more than just straight up graphic design. Like a lot of what I was studying was print, and I was interested in something that was a little bit more impactful. And I enrolled in an MFA program straight from undergrad in design for social innovation, which is a program at the School of Visual Arts in New York. It was a brand new program. I think it was the second graduating class from it. And it was really at the wave of one of the early waves of folks starting to dedicate entire degree programs to thinking about how to build a sustainable career. And at the same time, I paired up with 2 college classmates of mine who I had known in college, and we had tried and failed a different business idea while we were undergrads, and we were really looking to start something new. One of my co-founders had recently read a report that came out that summer. This was 2013 from the UN around sustainable. A lot of people reference this report all the time, but how our population is growing, our protein demand is going to increase on the planet, and the ways in which Western society is consuming and growing protein was just not sustainable. We're all familiar with this narrative now. It was new to me at the time, and new to us. And the suggestion that was made, among others, was to start eating insects. And there was something about this concept that for the three of us just really clicked. We had each had insects at different points in our lives prior to, which is sort of unusual and unexpected. And we felt like it was it would be a good use of our diverse set of skills. So I could bring design and branding and marketing to the table, plus everything that I was working on in my MFA program. And my co-founders had other skills as well that were instrumental in bringing the business to life. So that was my very first foray, both into working in startups and working in the climate space. And I quickly learned a couple things. One, I learned about this thing called venture capital that I knew nothing about, and learned that it's actually not a one-size-fits-all form of capital. And we never successfully raised venture capital money. We have angel investments, but we don't have money from traditional VC firms. I can talk more about that if that's of interest to anybody. But two, I also really learned that there's something, for me at least, that was crucial in making sure. I felt it was extremely important to have a career where I was building something and creating something. I'm a designer by training, as I said, so I like making things, but I like knowing that what I'm making is going to help make the world a better place. I want to leave the world better off than how I found it, or that's the hope, I think, and that probably resonates with a lot of folks here. That was my first experience in climate, and it was a different era. People did not understand why we thought it was a good idea to eat insects. We had a really hard time building that business and getting it off the ground. And so because we didn't raise venture capital money, I needed to have a full-time job doing something else to help make ends meet. I went and worked at 2 tech startups in New York. They both had a social impact component, which helped further this, interest of mine, but also helped me realize I really do like early stage startups. I like businesses that everybody wears many hats and people have to figure out exactly what they're doing. And I started to realize I wasn't sure I wanted to be just in-house working on one problem. I thought maybe I wanted to be working on a whole host of problems and helping a lot of people solve a lot of different problems, which led me to think, oh yeah, that venture capital thing that we tried a couple years ago might be of interest to me, because you get to work with a lot of founders and people far smarter than I am solving important problems. So I went to business school because I believed, true or not, at the time that nobody would hire me in the venture capital space without a business background, a traditional business background. And because I only had this design career under my belt, turns out that what ends up helping me get my jobs is not the MBA. That wasn't a differentiator, but it is the design background. So it's a lesson I learned the hard way. And straight from my MBA, I went and worked at a deep tech firm focused on computer vision. So using my design sensibilities a lot in the companies that we were looking at, and was there and learning a lot about how to assess deep tech companies. But I was missing again that piece of what I have always found fulfilling in my career, which is helping leave the planet better off than we found it. It wasn't most venture capital firms, it's not a knock against where I was prior to where I am now. It is just not a component of the industry that's inherent to the industry. But so it led me to look for a firm where I could continue that kind of work, but also be moving towards the mission that I care a lot about. And when I came across At One Ventures a year ago, I almost couldn't believe that a firm like this existed. It's the entire mission of the firm is to help help humanity be a net positive to nature, help repair the planet, and solve the climate crisis. And so, yeah, I was hired as an associate doing strictly investing work, but took it upon myself to also help build out some of the platform and portfolio support efforts that most venture capital firms need. And so became really involved in and interested in the ways in which we can help our portfolio hire. And because talent is the most precious resource, perhaps except for time. And yeah, so that's sort of what leads me to be here today. To tell you a little bit more about us at One, in case it's of interest to anybody. So we are a 2-year-old firm operating out of our first fund, which is a $150 million seed and A fund. We're actually about to start raising our second fund, which will be about $300 million. Because it's a pretty large fund size and we're focused on seed and A, we have quite a big portfolio already. I think we have 23 companies in the portfolio who are all very actively hiring. And they are all, the only thing we invest in is climate tech. So we look at 3 core things when we assess a company, and I'm sharing this because it'll help you understand who's in our portfolio and who could potentially hire you. We look at a company that so once they obviously check the box of helping solve the climate crisis in some way, they have to have a strong techno-economic advantage. So we really want to understand both the deep tech solution that they are bringing to life. We have a very strong preference for hardware. If you've taken a look at the portfolio at all, I haven't done the math, but I would say probably 90% hardware. We look at unit economics as well. So the example I often give folks is if you have invented an electric boiler and it's going to replace the gas boiler in people's homes, it needs to be as cheap as, if not ideally cheaper, than the total cost of ownership of a gas boiler, because we don't believe that customers will be willing to pay or should have to pay a green premium for products that will help make the world a better place. And then we look at what we call the TIE, the total addressable impact. So sort of like a TAM calculation, except thinking about the impact piece, which is something we actually sit down and quantify. So that same example again, if every single home in the United States were to replace their gas boiler with your electric boiler, we would then calculate what the annual emissions reduction would be because of that. And we're looking for sort of orders of magnitude there. Other than that, we are sector agnostic. So there are certain funds in this sector that look at just energy startups or startups solving specific pieces of the puzzle. We really look at anything that helps, as you know, to use our tagline again, is going to help humanity be a net positive to nature. And we, as I said, just looking at my notes, we are extremely comfortable with hardware. I can share if it's helpful. This is all on our website, but I just pulled together a slide of this is our portfolio. So we really do have everything from food and ag to, Temptive is a wind company. Noon Energy is a long duration energy storage company. Monarch is an electric tractor. Climax is in the food space, Alchemy is in the textile dyeing space, Apiscore is a 3D printed home company, Ascend Elements is a battery recycling, lithium-ion battery recycling company. So Cruise Foam is making an alternative, like a earth digestible styrofoam. So we really do cover a lot of bases, which hopefully there's something in here that's exciting and of interest to everybody. And then the last thing before I shut up and let you guys ask me questions. Oh, good. It was already shared in the chat. So as I sort of alluded to before, we do have a board the last time I looked, or we can look at it now together. Yeah, there are actually 23 companies in the portfolio. It says 24. One of those companies is us, because I want to be able to post our own jobs on our job board. But we have, as I said, we have almost 250 jobs that are open right now, which is a lot. Specifically, some that I'm going to call out because I know these companies are actively hiring. Avalo is looking for someone for a data scientist with experience in machine learning. We're looking for a head of hardware for Mighty Fly. That would probably be a more senior role. Business development role at Sumptive, which is the wind company I mentioned before, and supply chain. If anybody here is interested in moving to or currently located in Africa, a supply chain person for our company, OpiBus. And then the other thing that we have, which is basically on the same website, but a slightly different URL, which I will just share in case you don't navigate to it. So you also have a talent network. So if you don't currently see a role there that's of interest to you, it's like, I highly, highly encourage you to sign up and fill out a profile, because you will then get alerted to jobs, and we will alert our companies when folks in the talent network are good fits for open roles. So I wanted it to not just be a one-way street where candidates had to seek jobs from us. I have worked at recruiting companies in the past and thought that it was smart to have it be a bit of a two-way street. Okay, I maybe went too quickly through all of that, but I'm ready for you to fire questions at me.
Thank you, Meryl. I think that was very insightful. Thank you for sharing that. And the chat is open for any questions that any of you in the audience want to ask. So feel free to put a question in there. Feel free to directly message me, Pranav, any of us, and we can field it as well if you would like us to read it out. I have a few questions for you in the meantime, Meryl, while the others sort of think through what they want to ask. So you mentioned, your design background as something that probably ended up being the differentiator rather than trying to acquire like this business background. And I recently had a discussion actually with a product designer, and they were mentioning how they don't understand how their skills might apply in this space, right? And I was wondering if you might be able to shed some light on that, like how might a conventional SaaS type product designer apply their skills toward climate tech?
Yeah, absolutely. So I think to apply, like I will say specifically to climate tech VC or VC in general, it's been it's so obvious to me now in many ways that part of what is helpful in having a design background is what we're ultimately in the business of is helping our portfolio companies succeed. And if you can bring real experience having built something or operated in some way to the table, that versus having just, I don't want to say just, but versus having I can sit down with our portfolio product that they're building or look at their pitch deck and give advice. And I think the same thing holds true. I mean, I'm a firm believer that a design background is actually, it's just you're learning a different way of thinking and thinking about and viewing the world, and that's going to be applicable in so many different ways. But when thinking about climate more broadly, these are solutions that we are building to problems that will fundamentally require people to change the way they currently live, whether that's change the way we view transportation, change the things that we eat, et cetera. And if that's not a design challenge, I don't know what is. And so I actually think that every climate company at some point is going to need a strong design team for the most part, because you need to be thinking about the end consumer and how they're going to adopt the solution that you're proposing. And that's exactly what product design is anticipating how somebody's going to interact with the world. Yeah, I think some of the biggest design challenges are climate challenges.
Thanks, Meryl. Yeah, that was great, and I think it will be something that will be highly relevant to a lot of folks that are unsure about their place, you know, in this kind of climate emergency, climate crisis, and how they can contribute. I think there are a few questions along these lines that are coming up on the chat as well. So I wanted to address this follow-up I had also. So you mentioned that you're a bit unusual at One Ventures in investing heavily in hardware, you know, not just investing in hardware, but investing very heavily in hardware. So a few questions that I had. One was, how early do you look to make these investments into the life cycle of the company? And then related to that, there's a question on the chat. What do you look for in those companies? Do you have a minimum ticket size?
Sure. So how early? We typically say that we are what I'll call late lab bench. So we want companies that have, for the most part, built at least like a prototype that it's probably not commercial scale, it's lab scale, or they've built pieces of the thing, and we have a confidence that when they put it all together, it's going to work. We are, you know, the market is really frothy right now, so we are starting to look earlier and earlier, as any VC who you talk to will tell you that we're all starting to do that. And so we are becoming a little bit more comfortable with technology that maybe hasn't been built quite as to that stage as possible, or as I said. But that's typically the stage that we look for, that late lab bench, maybe early commercialization. We do not require you to have revenue when we invest, so it's totally fine for a pre-revenue company. We have, you know, we've made many investments in pre-revenue companies, and in terms of minimum ticket size, we don't really have a minimum. I would say our maximum is for the first fund is around $3 million US. Typically, we look, you know, as that like allows us to participate. We tend to like to lead rounds, so that should give you a general ballpark for the size rounds that we participate in. But we don't have a minimum. At least as far as I know, never come up before, to be honest. Hopefully that answered those.
Yeah, definitely. So just picking on that thread a bit more, there's another question on the line. So is the focus on hardware because you think that the area is currently underserved, more promising than other areas, or is it because of something else or a combination of factors?
Yeah, great question. And we get asked this a lot because there are so many investors who will say hardware is risky. I was actually on a panel yesterday with somebody who does invest in hardware. We were judging a competition, and he said software is better because if the first thing you attempt doesn't work, you can always pivot. You can't always pivot with hardware. Interesting philosophy. Had never thought about it before. I don't think hardware is unpivotable either, but we are interested in hardware because we are interested in having as large an impact as possible. And it's much easier to imagine a world in which the electric boiler is going to directly lead to an emissions reduction, whereas the software platform that helps monitor your energy usage in your suite of buildings isn't going to inherently be a behavior change. It might lead to a behavior change, and we would hope that it would be a catalyst for behavior change, but it's not something that is itself changing the way in which you emit. And so that's a big piece of why we look at hardware. I'd be remiss to leave out the fact that the two partners at our firm are both deeply technical. So Tom is a physicist and electrical engineer. He was one of the co-founders of Google X, responsible for a lot of the technology that came out of Google, on many patents. It's just like has a brilliant mind for inventing. He's really an inventor. And Lori has a chemistry background and biology background and has worked in the chemicals industry for a long time. So we inherent to the team also have skills and an ability to assess hardware companies that I think other firms don't have. And you should always leverage, the unique skills you have as a team.
Yeah, I think that's quite helpful. There's another question that was sent to me over DM. I am an early stage entrepreneur. Do you invest in big hardware? I'm assuming that's a term that's familiar to you. Capital intensive hardware.
Yeah, I mean, most, it really depends on what we're talking about, but there are lots of different ways in which, and we talk about this a lot with companies. So most hardware is capital intensive. You're building a physical thing that's going to be in the world. I was looking at a company before this today where a complete system of what they are building at scale will cost over $200 million to build. A VC firm is likely not going to fund that, right? That's a lot of money for one thing, but something we would fund, obviously, stages of the company's development and early days of a company, but we then work closely with our portfolio companies who are in need of large amounts of money to fund CapEx projects. We help them with things like debt or project financing, because there are lots of different ways in which you would go about bringing something like that to life. So if you're, I don't know, if you're in the hydropower space, like there's a whole industry and infrastructure around financing projects like that that's outside of VC, which goes a little bit back to what I was talking about in my introduction, where it's important, I think, for every founder and really anybody who's thinking about working in startups in general to understand that venture capital financing is one type of finance. And it's not a one size fits all, as I said before. And it's, it is the analogy that was taught to me in business school was I sell rocket fuel and I'm only going to sell it to a rocket ship. So my company Chirps was not a rocket ship. It didn't make sense. You could give us $5 million and we probably wouldn't have been able to scale any more quickly than we had with the money that we had because of the market. So the limiting factor there wasn't money. Just keeping that in, just blanketly sharing that, because there are lots of other ways in which you can finance a business too. Lots of grant money in this space as well, which is non-dilutive, which is important to keep in mind too. That was more than you bargained for in an answer.
Thank you for sharing that. So let's switch gears a bit. Something a bit more personal. Question from Madison on the chat. How did your experience at early stage startups prepare you for your associate role at One Ventures? What did you learn in those roles that helped you be a better investor?
Yeah, great question. So a little bit related to what I was saying before about being a designer. It's somewhat of a cliche now, but a lot of folks say, oh, the best investors are former operators. I think that's somewhat true. I think there are lots of different ways to be really good at this kind of work. And there's the best investor isn't going to be the best investor at every type of firm. But for me in my career, the things that I have done and learned that have been really helpful as I do the work are things like having founded a business and having had to deal with disagreements with my co-founders, for example. That's something that comes up a lot. And being able to sit down with companies. I did this at my previous firm. We looked at a company and there were co-founder disagreements, and figuring out how to bring in somebody who was part-time and what equity to give them. I had real world experience I could leverage. You also, when you're early stage at a startup and you get to witness those early days of a company. So I got to see two of my bosses raise Series A's and Series B's and understand like what the metrics were that they were being measured against. And that sort of stuff helped me understand like what the companies that I now help are going through. And I think on a very practical level, like I was really early in my career and I was hiring people and I understood what it was like to have to hire a team and build a team and have the team shift when somebody all of a sudden leaves. Those are all real things that I maybe wouldn't have gotten at a large company. Probably would not have gotten them at a large company before, like at the age that I was and I got those experiences, but are things I can like speak to as I'm talking to the companies we've invested in. Yeah, I think that just looking at your question, what did you learn in those roles? Yeah, I think that covers it, hopefully.
I have a follow-up on that on a similar note as well. So you mentioned earlier that as a founder, you worked on one problem, but you felt like you wanted to work on a host of problems, right? To kind of scale your impact. So now that you've seen the other side, like, can you tell us more about the trade-off of, kind of trading
Oh
like this
yeah.
depth for breadth?
Yes. And I struggle with this every day because I was actually just talking about this with a teammate of mine. Especially as a designer, I'm very used to a career where at the end of the day, I can show you what I've done, right? I have a physical thing I've spent time on, whether it's a button or a screen, like whatever it is, I can prove to you I've worked. And there will be nothing at the end, right? This is part of my job. There will be nothing at the end of this hour that I can necessarily show to my team and say, look what I did today. And that was a very hard transition for me. And I think if you are hearing that and you resonate with the maker side or the building side, you might not love VC. And to like add a little bit of color to that, the biggest difference is, and you have to be really comfortable with this in VC, is at the end of the day, I'm not the decision maker. These companies are solving problems. They might come to us for advice. They might come to us because we can give them a second opinion on something, but then they go home and they get to decide what to do. And that's how it works, right? I don't sit on any boards, but we do sit on some boards. I personally don't. But even when you sit on a board, you're one person on a board of many others. And so you have to be able to relinquish control a little bit. Whereas when you're at a startup, you're the person doing the work. And so it took me, I still struggle with it. I'm still trying to figure out exactly how to navigate the fact that I'm not the maker. I think that's part of why I've gravitated towards building out the career board and thinking about the platform work that we want to do at our fund too, because it'll scratch that itch for me a little bit.
Yeah, I think that's really insightful. So I guess another question I had for you, especially since you do have this type of founding experiences, now being on the other side of the table as a VC, what common mistakes would you advise aspiring entrepreneurs or climate entrepreneurs to guard against?
There's a couple. I think I see this a lot in climate, and it goes back to a philosophy we have at One. I think there are other firms that have different philosophies, but I struggled with this with my own company. We Chirps is a premium product, right? It costs more than Doritos, which is like the thing you would perhaps choose instead. And that inherently will limit so the point I'm trying to make is I'd be very cautious about pricing a product, as I said before, with a green premium or falling into the belief that customers, and often it's said as like environmentally conscious millennials, are willing to pay a little bit more for the thing that is better for the world. And I think we have lots of examples that prove that to be true, right? Like Everlane in their example where you could pay different prices and you got to see what the higher price covered and the lowest price covered, I think was a really good example of how that there are people who are willing to do that. It will inherently limit the market, the potential size of the market or amount of the market you can capture, because not everybody will be in a position to. And so if you are in a business where you want to be having as big of an impact as you can, you want everybody who is interested in your type of product to be able to afford it and have it kind of be a no-brainer solution. So that's one thing I would like on the climate side, I would absolutely caution folks to think about when building out their businesses. And then maybe less specific to climate, but more just on the venture, like speaking to the venture capital scene as it is right now, where, I mean, who knows what's going to happen in the next couple of weeks or months, but we're in a very frothy market, meaning there's a lot of money going into a lot of companies. Valuations are really high, higher than they've been. Like even in the 2 years I've been in investing, I've seen size of round just go up dramatically. It's like not as shocking anymore to hear about like $15 million seed round, right? That's like what I'm thinking at Series A, that's like a large Series A. And so the thing I often talk about with early stage entrepreneurs, it's very easy right now to, or tempting, I should say, none of this is easy. It's tempting to take a term sheet or an offer where the valuation is really high, because that's what the market is saying right now, and that will dilute you less as a founder. And I view that as a short-sighted approach to the market. I don't know what's going to happen. But like, the market is probably not going to continue to go up and up and up. And unfortunately, the valuation that you set at a seed round, for example, you have to beat that at your Series A. So you have a certain amount of time, typically 12 months, to hit certain milestones before you go and raise that Series A. And so you have to be really, really confident that that valuation that you're raising at your seed is one that you're going to be able to beat and get a higher valuation at your next round, even if the market turns. Because that valuation, you can't reduce it because the market turns after the fact. So it's a very long-winded and perhaps too technical explanation for be very careful about the frothiness of the market right now. If you're thinking about raising, it can be really tempting, as I said, to not dilute yourself so much. But at the end of the day, 10% of something is worth more than 20% of nothing. 20% of zero is still zero. So those are kind of the things I would caution against.
Yeah, I think that second point is very insightful. So I was wondering, what are the trends that are causing this sort of behavior of like these runaway almost valuations? Because if, say, there's a forced down round because those goals were not met, like that hurts everybody involved, right, including the early investors as well. And so what is pushing the investors to actually do this? Is it just that that's what the founders these days are demanding, or it's too enticing, or you have to be competitive with other VCs?
It's really a combination of factors, I think, and everybody has different opinions on exactly what it is. But the way I've come to think of it is it's a combination of a few things. The stock market doing really well. So as a result, there's a lot of cash in people's pockets and people have to put it places. It's like the most pathetic of terms, but that's generally how it's thought of, is like when people have more money, they need to put it in more types of investments. On a very practical note, a lot of endowments and things of that nature have ratios they have to maintain. So you might remember, I'll put it this way, if I run an endowment, I probably have in my mandate that a certain percentage of the money in the endowment will be invested in the private market and a certain percentage will be in the public market. When the public market starts to do really well, that throws off my ratio. So then I have to put more money in the private markets. And that's a little bit of, it's like illustrative of what led to there being more money in VCs in general. I think we saw 2021 was one of the best years to raise a VC firm and fund, and a lot of money went into the space in that year. And so then a lot of money is around to go into companies. And then it becomes a market forcing situation where there's a lot of dollars chasing maybe the same number of companies. You're going to be able to fetch higher and better terms.
Yeah, I think, again, that's very insightful. One final question before we move on to a different theme, but what's the current sentiment within VCs that you've spoken to or at One Ventures around this trend? Like, do you think that this will continue, or, there's a ceiling for this and potentially a reversal? What are the current sentiments?
I can only speak for myself. I don't want to speak for my colleagues. I think it's definitely going to turn. I think we're also going to start to see there's just going to be a lot of shifts that lead to it. I think something that's top of a lot of folks' minds in climate in general is like gas prices right now and how that might be a catalyst for electric vehicle adoption and things like that. And I mention that simply to say that we are starting to see signs of, for just, a whole host of unpredictable reasons, signs of things changing. Inflation will make things different. So I think this year will likely, I can't tell you when, but I never think it's a good idea to presume that like the bubble will continue to bubble and bubble. I wish I knew when. I wish I had a crystal ball, but I don't. And so I think, and I am, as an individual, somewhat risk averse. So I think it's always good to be hedging against that, which is why I used the example before of, it's still better to have what seems like a smaller percentage of something that is something versus a large percentage of nothing. And a down round is, as you said, is nobody's incentivized for a down round, except for perhaps the investors who come in at the down round.
Right. So we have a question from Rajiv. Rajiv, go ahead
Sure.
if you would like to ask
Hi,
it.
Rajiv.
Hey, Meryl. So fun fact to everyone, Meryl and I did our MBA together. She was the star MBA.
No, it was not.
But with her chirps and everything.
Oh, God.
So good to see you, and Meryl. In fact, I raised my hand like 20 minutes ago, but you just actually talked about the question that I was going to ask.
Oh, good.
Yeah, let's just flesh it out a little bit. It was about the energy crisis and how do you see that affecting the climate VC space? And I could go a little bit in detail, and not only from you, but maybe I'd like to hear the thoughts of like Pranav or anyone else in the panel. But there is the supply crunch right now. Oil and gas prices are off the charts. How do you see this affecting like unit economics when At One Ventures look at particular investment opportunities? I assume that it'll be positive now given the opportunity cost and just VC funding in this space. We know after 2 years ago, when there's a huge focus on ESG, climate economics, all that became really important. But now there's like a supply crunch and people are just trying to make, ends meet. Is the world gonna not focus too much on, ESG, or what's your views?
I actually think it's going to become more and more of a focus, because if we think, for example, take gas prices, and gas prices are high right now. I don't know if people here have cars, but my husband and I recently just sold our 16-year-old internal combustion engine vehicle that I literally learned to drive on, and I could not believe how much money I was spending on gas for that. I really should have gotten rid of it a long time ago. And when you do the calculation to figure out the total cost of ownership of an electric vehicle today versus an internal combustion engine vehicle, oftentimes the pushback that folks would give was it's still cheaper to own the doesn't, I don't want to presume it's not going to go up too in some way, but it's not going to go up in the same way. It becomes now a market force that will help people make the decision to adopt more electric vehicles, which is something I think we desperately need in this country. Because if you look at other countries that have had massive EV adoption, it hasn't been it's been a regulatory forcing that's led to that. So the countries where they have massive electric vehicle adoption have been ones where they have literally priced into the market that an EV has to cost less than an internal combustion engine vehicle. We don't have that here, obviously. And I think you can install EV charging on every single street corner in every single city in the United States, and it's probably still not, people will tell you it's range anxiety and things like that are stopping them, and it's still not going to make the change, because the truth of the matter is, maybe I'm going too deep into this one example, but I think it illustrates the broader problem. Truth is, that's not what changes people's behavior. People in this country buy a new car on average every 8.6 years, I think it is. So even if every single car purchased this year were an electric vehicle, we still would not be making much of a dent in terms of turnover and changing the kinds of cars on the road. Something that might change people's behavior is all of a sudden it costs you so much more to own your gas-powered vehicle, and it would cost you so much less to own an EV, especially at a time right now where the used car market is really frothy, and somebody spent way too much money on my old car, Carvana did, not too much, but just more than I thought I would ever get for it. It actually might shift people's behavior and have them adopt the more environmentally friendly things. So I think what we are seeing is a moment where on the unit economic side, it actually we're likely to have more examples of it making more unit economic sense for people to adopt the environmentally friendly and planet friendly option. That's my hope.
Thanks, Meryl. Great answer. I think so too. Well, I hope so too.
Yeah.
One more question from Steven on the chat. I've heard of the terms dumb money and smart money, that is money plus contacts plus advice. What is impact-driven money called? How can founders go about identifying that type of money so they can be confident that their investors will support actions that aren't profit maximizing in the traditional sense?
Interesting. I'm not sure that there is a term for it, smart money versus dumb money. I think there are firms that will just outwardly tell you we are impact firms. I think like the example everybody always thinks about is a firm called DBL Partners, double bottom line. They're based in California. They're like the first impact firm, I believe. And they have contracts and things that you sign when you take an investment from them that commit you to certain metrics that I think you're going to have to hit. Not exactly sure how it works legally. And then there's also things like becoming a B Corp, where you can state that and it becomes very obvious to your investors, and that's just a part of what you're doing. But the point I want to focus on of what you wrote about was that how can they be confident that their investors will support actions that aren't profit maximizing in the traditional sense? And I'm not totally sure what you mean by that. So if I'm misinterpreting this, interrupt me. But the way we think about it at One Ventures is the profit maximizing thing will be the impact maximizing thing. So you aren't going to be making a compromise on the impact side in order to achieve great profit. And in fact, when you do achieve great profit, it means that you've reached a huge number of customers and had a huge impact. So that's why we focus so much on unit economics, because if you can't have competitive unit economics doing the thing that is best for the planet, you will be at one point in a position to say, well, I could lower my costs and get more customers and make more money if I switched to that plastic packaging or whatever it was, which wouldn't be the best thing for the planet. And so we focus on businesses where the thing that they are building, if they are successful, will both be planet impactful for the planet and maximizing impact and maximizing profit. They're not two separate tracks. They're sort of representative of the same success. But I think going back to sort of how to identify it, straight up ask investors that you're talking to. I think you should. Investment conversations and pitches with investors should be two-way streets, two-way conversations for sure. These are extremely long relationships. I often say to people that it would probably be easier for me to divorce my husband than for you to kick an investor off of your cap table. And I think that's legally true. These are very long relationships, 10 or 12 years. If you don't like the people that are investing in you as people, and you don't think they're going to support what you are building, don't take their money. There will be other people out there who will be aligned in what it is that you're building and won't try to change the trajectory of what you're building and will want to give you money.
Great. Yeah, I think that's a very important point. Switching to a more general question oriented towards some of the job postings that you shared earlier. Would you like to share any advice on how folks might be able to structure really compelling applications to these roles?
Sure. I think first of all, and I can put my email in the chat. Send to everyone. Email me if there's one that you come across and you're particularly excited by, because I want to be able to help. And I want to be able to help you if it's the right role and I think it would be a good fit for you, put you in front of the right people. I think in general, it's hard to give broad advice on 243 jobs, but in general for trying to break into a career in this space, something that I think everybody is looking for when hiring in this space, or should be looking for, in my opinion, is a compelling belief that this is something you are deeply passionate about. And because there are lots of jobs right now, it's a frothy job market, as everybody says, and lots of people are hiring. And so if you could work anywhere, why do you want to work on this problem specifically? And maybe another way to think about it is, if this isn't, and this is like the wrong audience to tell this to, obviously, but if climate and solving the climate crisis isn't something that's going to be exciting to you every single day when you wake up, like working in this space is probably not a good fit, because it can at times be depressing work, right? When you're confronting the many problems that we have to solve, and the very slow approach we're often taking to solve them. If you aren't motivated wholly and truly by solving that problem, it's not going to be the most fulfilling work to do. So figuring out your why, if you will, baking that into your resume or your cover letter somewhere, and making sure that that is aligned with the companies and roles that you're looking for, is probably my best advice.
Thank you. And just one final question before we wrap up, unless Pranav, you or Daniel or anyone else has any final questions. We always ask this to all of our speakers. Are there any books or media, podcasts, anything that you've lately found fascinating that you would like to recommend?
I think I listen to a lot of probably like the same climate oriented podcasts that a lot of people listen to. Big podcast person. I used to run to podcasts every day. But there's a new one and there's a lot of things that you can read. I have like a stack of books back there that are around climate disasters and things like that. But something I do want to, you clued me into this question, so I came prepared. My answer is it's not specifically climate focused, but I think it does a really good job of highlighting just like important things to think about in the world, which climate touches upon nearly all of these things in some way, shape, or form. It's a podcast called Ones and Twos with Adam Tooze. So Ones and Twos, spelled Tooze, which is Adam Tooze's last name. Ones is not the last name of the other person on the show. I think Cameron Abadi is his name. Anyway, it's a great conversation type of podcast, and they pick two numbers, basically different facts numbers and facts that represent different things going on in the world right now, or historical information, and just talk about them. It's more of an economics podcast, but it's really interesting. So that's my recommendation for today.
Great. We actually do have one follow-up question from
Sure.
Kushagar on the ESG answer that you gave earlier. Kushagar, do you want to just ask it directly to Meryl?
Hi, sure. So I am Kushagar. I'm currently studying in Columbia University. So I actually had a question on the aspects of social, and so within ESG, they have the social and governance aspects as well, right? So how does primarily a governance aspect influence your decision? Like, do you look at the diversity within the fund as well, or how many women are there, how many BIPOC people, and does that actually make any influence on your investment decision making?
So the things around diversity, unfortunately, do not impact our decision making. They are things we track and things that we are painfully aware of. And I will say that we are very proud of the fact that we are a team of 5 people. 3 of us identify as women. So we're already trying very hard to change some of the stereotypes and just truths that exist in this industry. But it is not a core piece of what we do. It's not a mandate of our firm. That said, it is something that we do openly talk about with our companies, and in a lot of the recruiting efforts that we help out our company, like things like this, we also do have a lot of conversations directly with our companies about hiring, and have partnerships with diversity recruiting organizations, whether that be gender diversity or racial diversity or sexual orientation. We help our companies think about that and make sure that's a core part of what they're considering when they do their own hiring. I think it's hugely important. I think also today is like Women's Day, so it'd be remiss to not mention that I think it's great to see many women on the call who are interested in this, or people who am presuming and should not presume are women. Yeah, it's an industry that I think needs more and more just diversity of people. Everybody is touched by problems that the planet is facing.
I don't have any further questions. Thank you so much, Meryl. I think this was a really insightful conversation. I really enjoyed hosting you, and I think
thanks for having me.
Yeah, you had a lot of amazing, knowledge and advice to share. Thank you for spending an afternoon with us. I guess that's all I really have to say. Anything to add, Pranav?
Oh, I'm good. Thank you so much. I mean, it's been, I think, although Meryl, you said you went through the slides too fast, but as you can see, I think we really got value out of this session, right? Yeah. So it's been like
I'm glad.
20 minutes of Q&A. So absolutely worth it. Totally. Thank you so much for being here.
Thank you. And have a good rest of your day, everybody.
Thanks, everyone. Bye.
Stay safe. Bye-bye.